Oh my goodness, I am in the middle of switching jobs and I need to buy a house. What do I do? Hey, it's Robbie Bro with Tracy Lasser at Acadiana's weekly mortgage minute. Tracy, thanks so much for joining us.
Good morning.
So, got a little. We've had this pop up a couple of times. People are in the middle of switching jobs, but also want to be able to buy a house. And conventional wisdom thinks that you can't, but apparently
You can. Yes, you can.
how's that work?
So, people do this for a variety of reasons. One may be relocation, where you're starting a new job. Maybe you got a job offer and you're moving to a different state, let's say. And another reason is if you are graduating from school, professional school, and in a specific trade, and you're about to start your first big boy or big girl job.
Those are always fun. So what does that end up looking like? Do you have to have a copy of a contract from your employer?
Yeah. So depending on the loan product, that's what dictates a lot of the guidelines, but you must have a fully executed employment contract. Fully executed means you must sign it. The employer must sign it. It needs to be dated. It must state a few things, specifically what your income will be and what your start date will be, and if there are any contingencies to you obtaining the job.
What do you mean by contingencies?
So it can't be you must pass X test in order for us to employ you. Because what if you don't pass X test before employment? So in other words, all of those contingencies have to be fulfilled before underwriting is done, so that we can ensure employment.
No, you have the job butts.
Right. No buts. Yes, but also the income cannot be variable. So it has to be some set salary. It cannot be bonus or commission. Sometimes overtime can be a little difficult. This needs to be a straight salary that is guaranteed based on the job.
You could probably have a little bit of overtime in there, but it's not something that you can count, correct?
Right. Yeah. It's fine to have that. Like I have one right now where he's getting a base salary and bonus per year. I don't need the bonus to qualify him. It's okay that it's on the employment contract. I just can't use it. Gotcha. Yeah.
So besides the employment contract, what else do you need?
Well, I want to back up too. So going back, I have a client right now who actually we're in this situation. He is graduating from professional school as we speak, and he has a job history, but it's mostly part-time internship while he's been in school. So what's great is we can use his university transcript as his employment history. So instead of him having a blank employment history or a spotty employment history, we use his college transcripts to show, hey, he has been in school for X, which he's graduating in that profession, and he's obtained a job in that profession. So then it bridges that gap, and it's used for employment history purposes.
Gotcha.
Sorry, what was your question?
So besides employment contracts,
okay,
what else do you need?
Yes. Okay. So depending on the loan product, you must start the job anywhere from 60 to 90 days of closing. So let's just talk about conventional loans. So a conventional loan, you can start the job 90 days after you've closed on the house, provided you check all the boxes. So one of the things you have to be mindful of is reserves. What are reserves? That's money left over after closing, after you've paid the down payment, the closing cost, whatever, the inspection. This is like your rainy day fund that you have stashed away. One of the main reasons you need this is because if you're not starting your job, how are you making those mortgage payments until then? And how are you paying the rest of your bills? So make sure that you have anywhere from 1 to 3 months. It really depends on the product and the file. With a really strong file, it may be very minimum reserves. And reserves, let me go back. Reserves are X number of months of your total monthly mortgage payment. Principal, interest, taxes, insurance, mortgage insurance, HOA, flood, whatever is required on that property, it would be a number of months of that.
And you'll see that that's not an uncommon
Mm-mm.
qualification or
Right.
qualifier for most of the loans to be able to have that. Obviously the bank wants to make sure that you've got the ability to repay, and reserves show proof.
Right. So, but it's fairly easy. I mean, as long as the employment contract is strong, it can't just be an offer letter. It actually has to be a contract for employment. X start date, X salary, where you're reporting to. It probably shows the job duties, blah blah blah. So it's pretty easy.
Gotcha.
Yeah.
Other than reserves, anything else that they need to know?
Well, just the basics on, qualifying. Even if you're just graduating from school, for example, you still need valid credit scores and a valid credit history. So you can't just come fresh out of school with nothing necessarily, because that makes the approval process difficult, and especially depending on the product. So you always want to make sure that you are establishing good credit, especially while you're in school, which is something that we can help with as well. But yeah, just make
Could
sure
be an
that
idea
you're
for the next episode.
in the next video. Yeah, but otherwise it's a regular, file from a guideline standpoint, besides those few points. So,
Perfect.
yeah.
So if you're about to get yourself a new job and need a loan, or if you just need a loan, period, make sure you give Tracy a call at
337-257-9146.
We will see you next week.